Hey, welcome back to Tips of Financial Suit. Good to see everyone here again today. Well, we're talking about how to get a house, how to qualify for mortgage, what to do to rent, and pros and cons of different financial plannings. However, what's about protecting your home and your mortgage? Have we ever talked about it? I mean, when you look at your closing disclosure when you sign at closing date, there's a couple of different insurance fees that include in there. So for example, when you put out less than 20% or when you have a FHA program, you have to pay that monthly private mortgage insurance. What does that protect you? Or at the same time, when you get FHA, there's the upfront premium mortgage insurance. What does that protect you? And then many other insurance. So today, let's go over some of those insurance to see what are they and are they beneficial to you. So let's dive down right away. The PMI, private mortgage insurance, that monthly you pay, either it's $50 or $100 or $120 every month until you either have enough equity to get rid of it or you refinance to get out of it. Those actually not protecting you, but more are protecting the lenders, just in case you go defaults or you can't afford to get foreclosure. Now I'm sure you already know that because your mortgage loan officer should have explained to you when you first look at it. And also the upfront private mortgage insurance when you go with FHA, similar things. That's fee you pay to the FHA so that the FHA can guarantee that loan and tell the lender, hey, we're receiving that fees already. When something happens, the insurance who we pay that fee to will come out and pay the lenders. Again, it protects the lenders, not you. And at closing, on that one of that section is say one of the title fees is lender's title premium insurance. What does that protecting you? Well, usually what title do is they will do a research of who owning the house, anybody suing the owner of the house, is the house under any kind of liens or anything like that, to make sure that the house, when it's transferred to you as a buyer, is pretty much free and clear and only for the lenders and you. So that insurance that you're paying for or the seller paying on your behalf, depend on your contract, it's actually again protecting the lender just in case someone come back and sue you and say, hey, this house was not rightfully sold to you, and then you lose the house, but then the lenders still get their money back. You don't get anything. So why are we keep paying all that, right? Well, it is a requirement from the lenders to protect themselves, but you have to pay the fees. And also one of the other things that's very common, everybody have to have homeowner insurance. It protect you. Well, it protect the house, or it pay out when some unfortunate natural event happen: fires, wind, robberies, explosion, thing like that. You have the insurance to cover that. But if you still have mortgage, and the insurance come out and pay for it, the majority of it will go to the lender if the house is considered total loss. Or yes, it will pay you or give out the money to fix the house, but it's not really protecting you. But think about it, there are three things in life that we cannot avoid, right? Tax, sickness, and death. And I mean, knock on wood, we don't want to think about death. It's a horrible thing to think about, but it happens. And what if we don't prepare for that? What if you are having a mortgage and something happened and you're not there anymore? Who would pay for the mortgage? Who would jump in and take over that payment? When that happened, your spouse have to refinance. They can't just take over the loan like you think they can. They have to refinance to your spouse's name. What if your spouse at that moment is not in a situation that she can refinance and qualify for that loan process? Then that house might not be staying anymore. They will have to go through foreclosure process, right? So we don't want that to happen to you. So that's why you have mortgage protection. That's why you have your own kind of mortgage insurance that you want to take a look into to protect you in an unfortunate event. When the lender already have received many different insurance that you're paying for to protect them in any kind of unfortunate event. But to protect yourself, only you can do it. The lender not gonna urge you to do that. They only to protect their interests, okay? So if you have any more questions about mortgage insurance, mortgage protections, feel free to comment below, send me a DM. We can talk more about it to see what options are good for you. And of course, we don't prepare to fail ever. but we fail to prepare. So a good market protection will keep the peace in mind and will protect you and your family from losing your home with beautiful memories. Thank you for continue supporting us and watching our videos. If you like what you see or want to see more ideas and topic we talk about, feel free to like, comment, and hit the bell notification so that we receive more updates, news, and videos. Thank you. Have a good one.